Hello everybody, my name is Gary Yao, and today I would like to give you important considerations for international real estate investment. As the world becomes increasingly interconnected, international real estate investment has become an appealing option for savvy investors looking to diversify their portfolios and capitalize on global opportunities. However, venturing into international real estate requires careful planning and consideration to navigate the unique challenges and maximize returns. Today, we will explore the crucial factors to important considerations for successful international real estate investment. So starting with number one, conduct thorough market research. As if you are buying international or locally, before making any investment, make a thorough market research is essential. Each country's real estate market operates differently, influenced by economic conditions, legal systems, cultural norms, and political stability. Understanding the current and projected trends, demand-supply dynamics, and potential risk will help you make informed decisions. Research local regulations. Familiarize yourself with local laws and regulations concerning foreign properties, ownerships, taxes, and repatriation funds. Engage in local experts, such as real estate agents, attorneys, and financial advisors to guide you through the legal complexities. Second, assess economic and political stability. Economic and political stability are critical factors influencing real estate investment. Stable economies with favorable growth and offer a conducive environment for sustainable returns. Additionally, political stability ensures that property rights are protected, reducing the risk of unforeseen changes in regulation. Diversify across countries. Considering diversifying your investment across countries to spread risk associated with potential economic and political instabilities. So buying in different countries might be one option. It's no different than, I guess, buying in different states if you were investing also domestically. Number three, currency fluctuations and exchange rate risk. Investing in foreign real estate exposes you to currency fluctuations and exchange rate risk. Exchange rate fluctuations can significantly impact your investment values and returns. Monitoring and managing this risk is crucial to safeguard your investment purchasing power. Considering currency hedging. Explore currency hedging strategies to protect your investment from sudden exchange rate fluctuations. Consult with financial experts to implement effective hedging mechanisms. Number four, understanding local culture and real estate practices. Cultural differences can play a significant role in real estate transactions. Understanding local customs, business practices, and negotiation styles will help you build better relationships with sellers and stakeholders. Local partnerships. Partner with a local real estate professional who understands the culture nuisance and can guide you through the local real estate landscape. Fifth, financial options and tax implications. Securing financing for international real estate investments can be challenging as local lenders have different criteria for foreign investors. Additionally, tax implications can vary from country to country, affecting your overall returns. Seek expert advice. Consult with international tax advisors and financial institutions experienced in cross-border investments to explore viable financing options and understand tax obligations. 6. Risk management and due diligence. International real estate investments carry inherent risk, including legal disputes, title issues, and environmental concerns. Performing thorough due diligence and implementing risk management strategies are vital to protect your investment. Engage professional services, hire reputable property inspectors, environmental consultants, and legal experts to conduct a comprehensive due diligence process. 7. Investment goals and exit strategy. Clarifying your investment goals and having a clear exit strategy is essential for success in international real estate investments. Determine whether you seek long-term rental income, capital appreciation, or a mix of both. Monitor market trends. Stay informed about market trends and economic indicators to time your exit strategy effectively. In conclusion, international real estate investments present exciting opportunities to diversify and grow your portfolio. However, navigating the complexities of foreign markets requires careful consideration of the market research, economic stability, political factors, currency risks, and local regulations. By conducting a thorough due diligence, seeking expert advice, and understanding local culture and practices, investors can mitigate risk and unlock the potential for lucrative returns in the global real estate. Remember that each investment decision should align with your goals, risk tolerance, and long-term vision to maximize success in the international real estate arena. My name is Gary Yao, and I'll be talking to you soon.